Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Thursday, the 24th of March. Starting off with Atlantic Lithium, where we've been in a rising trend channel since, I suppose the beginning of November. Top of the channel heading towards 60 pence. Nice gap today through the initial February March resistance rather, at 43 pence. So above that, looking for 60 pence, perhaps as soon as the end of next month. Great little turn that the shares had, especially with that gap higher in December, and basically using the 50-day line, currently rising quite sharply as the support zone since. Moving along to Alpha Growth, which has had its moments in the past, but let's see whether we're back again on the front foot. Here you can see that shares have broken that December resistance line. That was around the 2.25 pence level. Above that, we're hoping and looking for the top of the broadening triangle from back in August, as high as 4.25 pence, maybe over the next 6 to 8 weeks, something like that. And looking, I suppose, better here after that bear trap from below the February support around 2 pence and the higher lows that we've had since then. So a little bit better there on Alpha Growth, along with the bullish divergence line there from back in August. So the bear trap there not matched by lower RSI trace, so that is a positive for the stock. On to a favourite of the recent past, Berkeley Energy, largely because it's actually gone up when it was supposed to go up and behaved in a decent way. We had the start of the whole excitement with the gap close buy signal, bear trap gap reversal there around 12 pence. Then the break of 15 pence resistance, the initial 2022 resistance, and that was another chance to get involved. And then the next one, I suppose, the clearance of the 200-day moving average at 16.5. Either way, we had an initial target there at 24 pence, and then a best case scenario target as high as 42 pence, which the shares seems to be quite keen on heading towards. Upside valid, at least while we hold above that old resistance area around 35, so above 35, looking for 42. And once we get there, I suppose we can upgrade the upside as well. Good to see Chesterfield back in terms of sort of being a recovery situation. We've had a long way down from 13 pence last May. Current situation is we've broken that line of resistance from January around 4.5 pence. Above that, we're looking towards old support on the way down, that neckline support around 7.8 pence. And that could be hit hopefully by the end of next month. Bullish RSI there, so we had the lower lows, but the RSI remained near the same levels as it was back in August and in October. So that is another positive for the shares. Coro, a lot of people seem to like this one at the moment for some reason. Here we've got the shares rebounding after that retest of the quarter pence, or I suppose 0.23 pence area back in December. Current situation, we've got an initial target here at an April 2021 resistance line at 0.48. Above that, we could see the shares head as high as the top of the rising trend channel from June at 0.7 pence, maybe by the end of May, something along those lines. But the target near 0.5 looks to be pretty well set at the moment, in a nice uptrend line. In the RSI window, third bounce, normally the one that gives a stock or market momentum, and that seems to be the case here for the breakout. Requested stock, which I was going to do anyway, is EnQuest. Here we had the gap higher back in back at the beginning of the month through the 23 pence level. Tested the gap and bounced halfway into it. I suppose the low there, 22.75, and we just failed to bounce off that. But golden cross, and also then a gap close buy signal at 24 pence. So we closed above the top of that gap on the around a couple of weeks ago. The view now is that while we're above the initial March peak at 29 pence, looking for the top of that rising trend channel from June last year as high as 40 pence. And hopefully we could see that by the end of next month. Moving along to another situation which is looking exciting at the moment. Core Potash Here you can see that the shares have finally managed to break that resistance zone around 1.2 pence, had a spike up to 1.6, but we're looking for 2.4, maybe as soon as the end of next month, while we hold above the old 1.2 pence resistance zone, or 1.25 pence resistance zone for core potash. Mode Global managed to make a bit of a, well, it's a 2 to 3 day recovery now, so that's quite impressive given the recent history of the shares. RSI bounce was the start of the recovery there, around 8 pence, 8.5 pence. Then the next trigger, I suppose, was the break of 9.5, which was neckline resistance from earlier in this month, and above 9.5. Looking for as high as 19 pence, which is the top of that January broadening triangle. A good start on that progress would be an end-of-day close or a weekly close tomorrow above the 50-day moving average at 12.5. So let's see if Mode can do that. Moving along to one of the punters' favourites at the moment for some reason, seem to have become totally enamoured by this situation. Osirium, I suppose cyber security issues coming in there, so that's playing on that. Recent highs up to 9.5 pence, so we need an end-of-day close above that. If we can get that, then it would be up towards the 200-day moving average area and the old November trading area as well for the shares over the next 4 to 6 weeks, and hopefully a bit sooner than that. Upside valid at least while we hold above the broken resistance line from January at 6.25 pence, and we've got a bit of bullish divergence there as well to hopefully power the V-shaped bull flag that we've got there at the moment, which looks encouraging. Moving along to Pantheon, which had an announcement today, and here you can see that shares are going to try and give us an end-of-day close back above the top of that gap, get the gap down that we had earlier in the month at 134. Above 134, we're looking for further progress towards that July resistance line projection as high as £1.70 over the next 1 to 2 months. And only really back below the gap area and recent swing low sub 125 delays the upside scenario for Pantheon on a technical perspective. Whopping contract upgrade for surface transforms. I think it was from 27 to 100 million, so that's nothing to be sniffed at. We've gapped through the 50-day moving average at 46 pence. The longer we stay above that, the greater the chance of a move not only towards 60 pence, which is that December resistance line projection, but I think one could get confident enough now to say that the ultimate goal here would be for the shares to hit 77 pence at that May resistance line projection. So above 60, looking for 75 plus. Weekly close above the 200-day line at 57 would give us more confidence that surface transforms can get up to the better levels, even though we've already had an island reversal, a bear trap island reversal. So we gapped down, made a new low earlier this month, and then gapped through the 50-day moving average. So it doesn't really get much better than that for a turnaround situation. And I suppose also in terms of the announcement from the company today. On to Tern, which is always a tricky customer. Here we've got, I suppose, multiple support for the shares around the 10 pence level. That's been the case since December. Uptrend line, bullish divergence line in the RSI window, which is also helping out. The key thing here, I think, is that we hold above neckline resistance at 13.5 pence. If we can do that, we've got an initial target at the 200-day moving average at 17 pence. If you're a fan of the shares, and you may be one of the few, given how many bearish comments this company seems to attract, but fan of the shares above the 18 pence area, we're looking for 28, which is that September resistance line projection, but I suppose that's 2 to 3 months away if we can get through the 200-day resistance line area. Finishing off with a stock which I've been stalking over the recent past just to see whether it breaks that resistance line there from January, around 7.5 pence. Wishbone has done that today. We've got bullish divergence there as well, so we had the lower low for March, but an uptrend line there in the RSI window. So that does suggest that the bears have been wrong-footed below the old November support at 7 pence. Longer we stay above 7, the greater the chance of a move to the top of the range at 14 pence. Maybe over the next 6 to 8 weeks, something like that. Weekly close above the 50-day line, 8 pence plus, would really help the cause as well for Wishbone shares. That's it from me today. More updates tomorrow.